Okay, so welcome everybody to what month are we in? April's Enhancing the Accountant Bookkeeper Connection series featuring CATA Accounting. So I'm sure by now most of you probably know me, but if there's anybody who doesn't, I'm Tanya Helps, the founder of Cloud Bookkeeping Services and Tanya's Bookkeepers Bootcamp. I'm a 2017 Intuit Firm and a future runner-up. I am a certified professional bookkeeper. I'm a current member of the Intuit Trainer Writer Network, a 2017 Black Swan alumni, Advanced Certified QBO Pro Advisor, Certified Desktop Pro Advisor, a volunteer mentor through Futurepreneur Canada, with over 20 years bookkeeping and income tax experience. And by the way, I have to put out a shameless plug. They've just announced the voting for the top 100 pro advisors. Yesterday, do you believe it came up? I'm on that list as well, so I will happily and shamelessly take any votes anybody wants to send my way.
Publicize that a bit because I saw you on that list and I voted for you, but I hadn't heard from you to vote for you.
I actually didn't find out until last night, so I posted it last night on my personal group, and then Sandra and Leanne posted it out on the other groups this morning because, of course, it doesn't look very nice for me to publicize myself in groups, so they did it for me.
Yeah, I voted for you.
Well, thank you. Yay.
They misspelled Tanya.
They've actually fixed it this morning. I
Oh,
know,
good.
they spelled it with an O. So I like to search by last name. But no, as of this morning, it's fixed and it's the correct spelling.
Right.
All right, so that is it for my little introduction. So,
all right.
Yeah, John and Bob, go ahead and pick your screen.
I got this. All right, can everybody see the title page?
It's starting to load.
All right, so
here we go.
We've really been enjoying doing these webinars with the assistance of Tanya. Thank you very much for the opportunity. A big part, I'm Jonathan Carter, CPA, CMA, and Bob Hamilton is also on the line, a CPA, CA. We work together at CATA Accounting Solutions, which is a cloud-based accounting firm.
Oh, and by the way, I'm sorry, if I can interrupt just for a second, Jonathan, I forgot to mention that, yes, these guys at CATA Accounting are absolutely wonderful, extremely supportive to bookkeepers. We have actually many clients, and Jonathan is on the very top. He's a first name for referrals to accountants. We work absolutely great together, which is actually, kind of the inspiration that Jonathan and Bob had to do this series in the first place, so.
Well, I was actually about to get into that. Now, we work with a variety of bookkeepers, not just Tanya.
Of course.
And we've seen some files that have been interesting that have come to us for year-end taxes, and that's really where the inspiration for this came from. The concept of period 13 or that closing period, all those things you have to do to make sure that the accounts are correct. And that, the accountants aren't going to be facing too much liability. When we do the taxes, typically the client is responsible for all the information. But quite often, as we know, the clients don't always know what's going on and don't always know if that information is correct. So we, as bookkeepers and accountants and accounting professionals, need to be a bit more diligent in what we look at for the end of the year. So we've talked about income tax. I think we talked about accounts receivables, and now today we're going to be talking about inventory. So I apologize to Leanne. This presentation was designed with the Canadian market in mind, so I'm not 100% sure about this first sentence applying to US GAAP. It does apply to IFRS, which is International Financial Reporting Standards, and ASPE, which is Accounting Standards for Private Enterprises, which replaced Canadian GAAP when IFRS came in. This is one of the accounts people mess up all the time. We've seen negative inventory. How can you have a negative inventory, really? We've seen things like people putting items into inventory too early to recognize an expense in a period and get that write-off when it's not really deserved. Is there any other way that people can mess around with inventory to improve results. We're just going to give a couple minutes if you want to type into the chat or just speak up. Okay. No real comments there, so get right into it.
Yeah, I think we all have tax brain.
Yeah, okay, sure.
Sure.
So basically, there's three main ways: misstating quantities, misstating the values, or other interesting ideas. So, including consigned items, it's very important to recognize who owns items. If they're not owned by the business, if they're on consignment, there should be a ledger of them, and they should be tracked. But they're not on inventory that belong to the company, including stale or outdated items, items that have expired, or expiring items too early to take a bigger shrinkage write-off. That's one thing we've seen sometimes. And CRA can take a notice when there's a large shrinkage write-off. So that's something to just be aware of. And of course, tampering with weigh scales, including empty containers. Bob and I both, we encountered the same interesting story. Me and the stories of John Rockefeller, where there was a situation where they were measuring oil by barrel and by weight, and half the barrels were filled with water. So that's just another item. Just looking at a couple of comments. Not sure I understand fully, but yes, the POS not matching QBO inventory is a very common problem. Those are more tactical issues that we're not really going to be touching on today about how the apps interact and QuickBooks Online inventory. For more training on that, I think Tanya is a really good resource for that. So, the next area, let's talk about some different quantity items. Just a good old picture of Home Depot. You've got thousands and thousands of SKUs, every item tracked individually, and then sometimes they would be bundled as well. So that can create some interesting inventory challenges.
Yeah, in my audit days, going out to a client's and looking over their shoulder while they were doing their year-end inventory count, that was one of my favorite parts of doing an audit. Imagine yourself walking into this warehouse while the inventory taking is being done, and you have to create some samples, do some sample counting to prove in your documentation that you have done enough work to justify the client's inventory balance. So this was really the one area where we could get into the client's business. It was the real world. Otherwise, doing an audit is kind of sitting in a pokey old boardroom and looking over papers and adding up columns and stuff. At least in the days when I did it. So so this was some of these slides are meant to show you some of the inventory situations you can run into.
Sorry, I wanted to comment on something that Dominique just said in the chat about the owners taking items from inventory. Yeah, that's a major issue, especially when it comes to things like auto repair shops. People buy stuff as inventory, write it off as shrinkage, and it's going into their own vehicles. That can be that really should be going against shareholder loan, not against shrinkage or cost of goods sold. So that's a good example. Thanks, Dominique. Here's another example. For this example, I believe we were thinking of the volume and measuring by volume.
Are those bags all full? And are they full
of
the
right thing?
proper items? Sometimes in an audit, we would ask them to pull a bag out of the pile, and we'd open it up just to check that the proper item is filling the bag.
Yeah. Another one you might measure by unit of measurement, since it's yards or yards rolls. Firewood measured by the cord, for instance. And Another one here where you'd probably be measuring by weight. You're not going to go in and count every grain of sand in this pile or whatever this is.
I have actually climbed into silos half full of fertilizer, and there was a cone on top, and I'd had to measure the height of the cone and then figure out its volume because we knew the density of the fertilizer and work out the weight because it was valued by the ton. So you put on your work boots, climb up and climb into the silo and start doing your measurements.
See, and
That's a
that sounds
pretty creative one.
well. It sounds like a great use for algebra, and so next time your child asks, "When are we ever going to use this again?" You just
Geometry.
say, or geometry, yeah,
And
yeah.
I did exactly that. I had to look up the
Yeah.
volume of a cone.
All right, Bob, what is it real quick? I'm not gonna put you on the spot like that. Okay, so just this next slide. Oh, I went the wrong direction. The next slide, we're talking about a WIP, and how do you know how much work in progress is there? How do you value that work in progress? I mean, in this particular picture, you've got hundreds of different little components. How does that make up where this is in the product cycle, for instance? With these smaller components, such as screws, how do you do an accurate inventory count? There can be situations where items such as like home hardware, Home Depot, are sold in ones and twos, but you have millions of them in stock, and it's completely impractical to count them. Any thoughts on how those will be measured?
I know.
Well, we know you know. So a common tool that people use is they use weight.
Size or volume, yeah.
Yeah, volume or weight. Usually weight is a good thing to go with. Usually smaller hardware items are in uh, they're very uniform and there's very low variance amongst the weight.
There is another way. If you use weigh scales, some of them are specially designed so that if you put your box of screws on the scale, you can set the weights to measure by tens, excuse me, by hundreds and by thousands. So if you have it on the 100 multiple and you have to put it out to 3, there are 300 items in the box. So you
Yeah,
can do a weighing type of count.
exactly. Exactly. All right. So the next is to overstate the values. Common way of doing this is not following FIFO. And another one is using incorrect unit costs and including additional costs that don't really go into the cost of inventory as a cost of inventory. Now, this generally speaking does not work in the business's advantage because it means they're putting something into their books as an asset instead of an expense. So that's something that can happen. But I've also seen it happen where they just inflate the price and then use that price, and that's just completely wrong. So, oh yes, the final issue being cutoff errors. Bob, do you want to speak to this a little bit?
Yeah, this is where we have to ensure, because inventory kind of sits in the middle of your accounting processes. You have the purchase cycle on one side where you're buying items in that go into inventory, and then you have your sales cycle on the other side. So that's items coming out of inventory. So inventory is very central to your accounting system and accounting process. You really have to think about that if you're bringing on board an inventory management system, inventory application, because it has to speak to a lot of other applications in your accounting processes. So what will happen is if you don't do a proper cutoff on your sales or your purchases, you have items included in inventory or excluded from inventory that shouldn't be. For example, if you have some items, if you've recorded a sale of a certain number of items, you have to make sure that they are excluded from inventory. So the cost of those items rolls into cost of sales to match off against the sales you're recording. So, and the same thing applies on the purchases side. So you have to make sure the cutoff of your inventory is in sync with your cutoff in your sales and purchasing cycles.
All right. Moving on. Got some little bit more detailed things. Bob, I'll let you continue on from here.
Sure. So checking out Canada Revenue, they their rule is you need to do an annual inventory, and they say this is usually a list of goods held for sale. They go on about it. You can go on the site and kind of put yourself to sleep reading through it. But the only valid method to check the quantities is for your client to do a physical count. So you have to have that listing according to CRA. As a value-added service, you can remind your clients that they have to do inventory. If they don't have experience or they don't have time or whatever, this could be a value-added service you can provide to your clients to assist them with their inventory. So you need to do an annual inventory. That's the takeaway from this slide.
All right. So this
Now,
is an interesting idea, the perpetual inventory system.
absolutely. Yep. It was interesting, and I had to even be reminded myself, your physical count, remember CRA says you have to do it annually, but it may not have to be done right at year end. CRA does allow where you have a reliable perpetual inventory system where your books are tracking through the individual items. You may not have to do your inventory at year end. If you have a reliable perpetual system and you periodically do test counts of items in your inventory and adjust your perpetual records to the actual physical count, you can use that perpetual system at year end to determine your inventory counts. So it will save doing the work of a full inventory right at year end.
So,
Valuing inventory. So according to CRA, there are two acceptable methods by determining either the fair market value of the inventory as a whole, in a case where you have bulk goods or that sort of thing. I guess fertilizer in a grain silo would be another example. And the more common way is to value individual items on your listing of inventory. You value them at the lower of cost or fair market value. And as Jonathan has said,
sorry.
we use FIFO, first in, first out, to determine the appropriate cost.
Yeah. Just to kind of emphasize that, it should always be the lower of cost or fair market value. Almost always. There's only one situation I've encountered. Bob, you may have more, and I'd love to hear if anybody else has, where the inventory was actually revalued to fair market value on a daily basis. And I'm just going to leave that out there and let somebody try and guess what were we doing inventory of that it was revalued on a daily basis. Always look to the lower of cost or fair market value. First, if something has been impaired in cost, you can't get the price you used to for it. So say, for instance, you're in EB Games and you have Xbox. Well, nobody wants Xbox. Everyone's on Xbox One now. Probably need to write down that image. That would be an example. All right, Bob.
Yeah, Dominique actually has already given her thoughts in the chat on that. That's kind of along the lines of what I was thinking. But I have to say, from Dominique's question, looks like she's um, quite experienced in inventory. So it's good that we've got
Yeah,
somebody experienced in inventory. So I just wanted to give her a quick shout out for that.
yeah.
Hmm.
Great guess. The company that I was working with, it was platinum, silver, palladium, and gold, which could be sold. They were hedging on the market on a daily basis, had to be revalued daily. That was a fun task. It was very interesting, actually. Anyway, Bob,
Yes.
did you
So
want to sum up?
just to wrap up, yeah, the inventory is such a huge topic, and we do invite people if they want to go into a little more depth on some of these topics. We're certainly willing to put on a webinar on specific issues. So
After
if
May
you,
1st.
yeah, yeah, we won't be doing it on Monday. So if you do have an interest like that, please do let us know, and we can share out our experience and information that we're aware of. One of the interesting inventory situations I was involved with was a company who provided samples or products to secondary schools for their science labs. So I was in counting like frogs and dead cat carcasses and scientific equipment and that type of thing. So it's different businesses are lead to different challenges and opportunities, I guess.
Yeah.
So some of the other potential issues, like manufacturing businesses, can become very tricky. Think back to Jonathan mentioning the computer manufacturing company, and the company has said this particular machine is 25% complete. This one is 60% complete, and to you they look pretty similar. So you have to become aware of the business, the manufacturing process, and to be able to make an accurate determination. Um, I mentioned the integration of the inventory system with other systems. You have to make sure your sales and purchases cycle synchronize properly with your inventory tracking.
Mm-hmm.
Perpetual inventory systems lead to issues of their own, keeping them accurate. How often do you do counts? Are some items more likely to be out of balance than others? So you might want to count them more frequently to update your records. Cutoff dates, we talked a little bit about. Um, and then you get into kind of the accounting analysis and the business management. Like you want to keep your inventory turnover high, keep your inventory levels low, in other words. So you're enhancing the cash flow situation of the company. And then issues like drop shipping, where you don't even record an item in your inventory. You have it delivered directly from the supplier to your customer.
Yeah.
So you can get into all kinds of, and Jonathan probably has other examples.
Well, I was just going to actually add on to the drop shipping there and mention a couple other things real quickly. Drop shipping, if you're going direct from supplier to customer, you're correct. That never enters your inventory. But there are situations where drop shipping, it goes from the customer to a third-party warehouse, or sorry, from the supplier to a third-party warehouse. It does go into your inventory, even though you're not storing it personally. It does belong to you until it's sold. So that's a situation that can happen. Bob touched on keeping your inventory low, and any kind of business that holds an inventory, there's the inventory turnover ratio. You want that to be low. For a lot of retail stores, you get about 2 per month. 2 times inventory can get turned over per month. I've seen faster, I've seen slower, and this is an area where if you can coach your client you can really add a lot to their cash flow by tying up less money in inventory. The best practice for major business right now is just in time. That is the theory that inventory is not delivered until it's needed in production. I just want to touch on one other issue that we are not talking about today, and that is transfer pricing. In manufacturing businesses, often there will be a bit of a structure. So the business in Canada creates a part, sells it to the business in the United States, who does a little tweaking to it, who sells it to the business in Germany, who does a little bit of work on it, who sells it to the final consumer. Playing with those prices between the related entities is transfer pricing. If you get into that kind of situation, it's very, very important to involve an accountant who knows transfer pricing laws and issues, because you can get your client into real trouble if they're just pricing it up to show no income in one of the countries. So just something to keep aware of. Well, I think that brings us to the end of our presentation. There was a question there. Dominique, we do not work with desktop on site anymore. However, I have a person in mind who actually helped Bob and I back in about, I think it was 2009 or 2010, do a major conversion. Michelle, she's awesome. Of 13 entities into a single QuickBooks Enterprise desktop file. And it was absolutely successful. We're able to do balance sheets, trial balances, everything we needed for each entity. Thierry doesn't like it so much, so it's probably best to stick with different company files, but it is possible, and I'd be happy to send that referral if you want to reach out to us privately. Now, there was a question about restaurants and bars measuring year-end inventory. So I know how I used to do it when I ran a bar, a bit of a nightclub. I'd be interested to see if anybody's seen anything different. For our year-end inventory, we would weigh the kegs. We would take into account, of course, the weight of an empty keg. We would weigh every bottle every night, actually, to ensure that the bartenders weren't drinking the profits. And we would count all of the unprepared food in the freezers and fridges. Of course, assigning a value to some of those items, such as produce, could be tricky, but we just use the FIFO method. And usually in a restaurant, the turnover is very quick, so it's whatever you paid on the last item. Were there any questions about that? So we got some comments here. Very interesting about the acupuncturist, Dominique. That does sound very similar to a situation that we had where even weight was tough because the product was so small. All right.
Is there a typo there? For a bookkeeper to market to a cow to receive referrals. Jennifer?
Well, I don't know how good cows are at sending referrals. Well,
She's corrected at CPA.
I'm just
CPA.
I had to tease.
Tax brain.
Moo. Moo.
Auto correct. Apparently her phone has tax brain too.
Hey, I'm insulted. CPA gets translated to cow because of auto.
That's really
that's pretty insulting.
That must be Apple. All right, I have just a quick comment there about the marketing to receive referrals. Hands down, for us to provide a referral, we need to know what your specialty is. If you don't have a specialty, how can we refer to you? If you do have a specialty, it makes it very easy. Let me give you an example. One of our colleagues specializes in law firms. That's all she does, small law practice. Whenever we get an inquiry for that, we just pass it on to her because that's her specialty. We do bookkeeping as a firm as well. Our area of preferred client is more in the e-commerce, internet realm, let's just say. But, if a bookkeeper has, a specialty in, say, daycares, very easy referral. Mortgage brokers, very easy referral. Rental properties, very easy referral. There's a few out there. If you can be as specific as possible in your niche, that helps us provide to you. Because my attitude and our attitude at CATA is best for the client. If we know somebody who's specializes in an area, I'd rather see them go to that person and get the bookkeeping done there and keep the tax business than, or even if the person is specialized in that tax area, I'd rather see the client than get a few extra dollars. So we have challenges with farm inventory. So I'm pretty sure livestock are measured in ones, and then wheat and crops are measured by weight. We don't have a lot of experience in the farm realm. Bob, do you have any experience in this area?
I grew up on a farm,
So how'd you guys do your inventory?
but well, obviously it was a very small operation. But I guess it depends partly on the size of the farm. Like to me, if you've got a dozen head of cows and some chickens and some grain in the elevator, it doesn't sound like it would be a very challenging situation. You count the cows, you check out their weight, and there are probably industry averages as to how much a cattle beast on the hoof is can be valued at. So I'm thinking this is, and I guess the comment says this is 3 farms. So you multiply that by 3. Uh, I'm 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 not seeing. Maybe I'm simplifying too much, but I'm not seeing that that would be a big challenge. If you have a specific um, comment, then uh, post it
I,
and we'll try to address it.
I think the specific comment is essentially they have terrible records,
Hmm.
and there's nothing you can really do about that. But start from fresh and try and get them on create those good habits and go on for that. Now, there was some questions here about from some newer people who are just starting up and about client portal. So the client portal is really easy. We use a variety internally, and for our preference is Google Drive, just because of the collaborative power of it. But we've used OneDrive, we've used SmartVault, we've used ShareFile, we've used Dropbox, we've even used WeTransfer, like all kinds of different things. But our preference is Google Drive, just because of how collaborative you can be with it. Now, with regards to just starting up and finding your niche, I think that's
Mm-hmm.
really an internal question. You need to kind of sit back and you need to look at what you've done in the past and what you enjoyed, what you didn't enjoy, and narrow your customer from there. Also, too, this should tie to a larger strategy if you have one, like we do at Data Accounting. We do have a forward-looking strategy. We're not necessarily looking for the easiest businesses to work with. We're looking towards a specific type of business that kind of goes along with our brand. I hope that helps.
Well, like myself, when I started out, it was the same thing. I kind of just took a little bit of everything, but what I found I enjoy is these small startup sole props. You don't make as much money off it because they're a lot more cash flow sensitive, but I felt a personal satisfaction from actually being able to make a difference on their lives and their business, and I can make a larger difference. So that's basically what I decided to niche in, sole prop service, small startup, just simply because of that. So
Uh,
Great
Um,
niche, Jennifer. Looks like we have a lot of overlap there.
yep.
Sorry, comment. Bob?
yes, I was going to go back to this issue about making a connection with local CPA firms. Um, I would say you have to get out there, introduce yourself, go outside your comfort zone.
Definitely.
Introduce yourself, tell them you're available for any type of assignment. Uh, keep yourself visible to them. Send them an email monthly, or find a contact person and make a contact with that person. Um, so I think just getting yourself out there and making it known that you have an interest in doing this. will open some doors.
Okay. Sorry.
All right.
All right.
Well, it was a great topic, really informative. I didn't have a
Good.
lot to say today because I just completely dislike inventory. Inventory and multi-currency, I am happy to send to people who enjoy it. So I know it was a great
Okay.
topic,
Well,
and
thanks again, Tanya,
well, thank you.
for hosting. Just checking the last of the comments. Oh, you're welcome, everybody. I hope everybody found value in this. Dominique, by all means, our email or my email is jcarter@cataaccounting.com. It's back on the first slide. I'm just going to go back to that first slide so it's up on the screen. Yeah, feel free to reach out, and I'd be happy to make that introduction. I'm not sure if she's taking new clients at this time, but I know she's extraordinarily capable. Bob and I worked with her, and she was fantastic. So, all right, looking forward to hearing from you, Dominique, and Jennifer. I wouldn't mind hearing from you as well because it looks like we definitely have some crossover there. Thanks very much, everybody.
All right, okay, thanks everybody. Have a great day, and I'll get the recording out sometime later today. Okay, thanks,
Bye.
Bob, Jonathan.
Bye all. Bye
Okay,
all.
bye.
Bye.